We ready?
I'll hands down talk about the spies a little bit and kind of what I'm looking at if at some point.
Get it started, brother.
Yeah, we're fired up. We are live on the internets. So guys, it's been a while since we've all been together. I think Nick was enjoying some family time and maybe some psychedelics while he was away. I don't know. I'm just talking shit right now. But no, it's good to have you back, Nick. We've missed you. GP and I have held it down for the past 2 weeks, but we're glad you were able to get away with the fam.
Yeah, me too.
Yeah, it's good stuff, man. Time away is important with this craziness.
Yeah. GP, I don't know if you were on when I had mentioned this. Like, I pretty much got stopped out of like damn near everything. I don't want to say everything, but quite a bit of, say at least 2/3 of the positions I had on.
It makes
while I was gone, so like it wasn't really the, what I wanted to see. But I don't know. Yeah, how are you guys doing?
It totally makes. I'm beyond besides frustrated with the action. I'm okay. Just getting other stuff done around the house and doing stuff like that. So, you see, I think the one that frustrated me the most was Amazon.
Yep.
And I'm not playing calls. I'm playing Amazon in the smart way by selling put credit spreads.
Okay.
Very low risk. It should work out, but it's Amazon and it puts in a bullish engulfing on Wednesday, and it takes out the last 2 days and immediately gaps down and pretty much gives back the whole move. And you're like, oh, you got to be kidding. Like, I like to put credit spreads because if you get them in the money, you're risking like, I don't know, $75 to $100 to make 500 or 1,000. So
Okay.
It like if you get like $100, 150 out of the money for Amazon, for the week, you can sell a $10 credit spread for like 920-ish, and you're gonna, if they expire worthless, you get to keep the 920. If not, you're getting 920 and the total spread's 1,000, so you get to keep like $80 or $100. I mean, you lose $100. So the other way of buying calls, you have to buy them like 500 points out of the money to buy any kind of ridiculous non-pricing. So this is the way I've been doing Amazon last couple of weeks, because it refuses to move. But yeah, that was my frustrating moment of the week, when you have this massive bullish engulfing bar and it just completely shits the bed. Like it outperformed the Qs by like 1.5%, right, the day before. Anyway, yeah. So there's been a lot of that, but that's what chop is, right? You gotta try. Hopefully, it ends up being the day it actually breaks out and not another chop day. But Thursday was not it before OPEX.
No, it was not it. That's a great way to put it. It was not it. It's just been, unless you have a longer term mind frame or you've been selective on your put buying. I mean, it's basically just been not just Amazon, but the indexes in general. I mean, basically the end of December was what we saw as the peak, right? And it's just been blah. Yeah, we saw this nice upswing here in March, but it's just it wears you out, right? It gets you tired and it gets you bored. And I think that's what, obviously, as I mentioned last week, I've got some things going on in my life, but it's just not been compelling for me to really try to put on trades. And maybe I should look at that differently, because there has been opportunity. But I think we're used to seeing that all clear signal, right? And it's everybody back in the pool, right? And that we just we haven't gotten that, or we thought we were about to have it, and then the last 2 weeks happened.
I think I agree
Nick,
with
you
the
were
bags.
gone. That was what happened. That's the tie. You left, Nick, and we went to shit.
Damn it.
Yeah. I agree with you, Bags. I think the part is that what people continue to do is point out the index, right? And the index had 3 weeks up. But if we were talking about this before we went live, or is if you took a look at the stocks underneath, they got about 3 days and then they chopped for like the next 3 weeks.
and we should actually record sooner on this, because we live, not that we leave it out, we get back to it, but you were pointing out Square, right? Like Square had really 3 really solid days, and then it was boop boop.
Yeah. But
Roku was the other
40,
name that you brought up, right? Roku, same thing.
Yeah. And the list goes on, right? Like the list continues to go on.
Yeah.
This is tech world, but now if you swap to energy or commodities, it's a whole different conversation, right? But even that is not the clean kind of breakouts that you're expecting here. And it's hard to take, you can continue riding this wave, but XLE is up 400 or 500% from the bottoms, and it's showing negative divergences. So you can continue riding the bullish wave, but there's an imminent failure coming in that, and you just don't know when it's going to happen, right? So, but the momentum's to the upside.
Yeah, especially in those names. I pointed out over the last couple of weeks that I really don't like the banks, and I still really don't like the banks. Nothing has changed in my opinion there.
Look at Goldman. Pull up Goldman, and this is what shifted my perspective. So on your chart, that's red, but on my chart, that's green.
Here, there you go.
Yeah. So to me, that's a really interesting candle on earnings, right? Like you have the potential to collapse, like JPM did. Look at just JPM weekly candle on earnings, right? If you pull up JPM and go to the weekly candle, that's what the weekly candle, like that's what it looks like. So it broke the prior pivot, it closed below the prior pivot, volume starting to increase, but then Goldman did completely kind of the opposite of this. So there's a little bit of hope. Yep, Morgan Stanley too, right? That's potentially an inverted hammer, reversal candle, etc. Take a look at Citigroup.
Bank of America doesn't look so hot.
Yeah, but that's been garbage since 2008. So Citigroup, here's another one, right? There's some signs that the correction in the banks. It's doji looking. It's on lower volume. It's under the prior week's close. So it's not the greatest of candles, but look at the one that started in October 2021, right? Right there at the bottom. That was essentially an inside candle off the red candle, right? On lower volume. And then it took off, and that was all she wrote. What did it do? It did $37, nearly 100% in 3 months. No, man, this company's the worst.
As far ago.
Who else am I missing?
Pull up K-Web. Is it? No, not K-Web. What's the regionals? The regionals are looking strong too. KRE.
Yeah, KRE.
Right. What you'll see there is that the volume on the downside isn't as great to me. There's accumulation in this chart over the last 4 or 5 months, and it put in a doji. So this could, and it's making lower, higher lows, so to speak, on the weekly as well here too. So regional banks are the ones that really benefit from like rate increases and stuff like that. So it was interesting to see this as well. So I don't know if the financials are dead or on the verge of finishing their stage 2 kind of correction and moving into their stage 3 kind of relentless gap and go type can't get anything more than a shallow pullback move.
You're gonna fuck around and make me buy some Goldman Sachs is what's gonna happen. You're gonna talk me right into it.
I don't know, Nick, what do you think? Is this bad or good?
You know, I've kind of been I've been wanting to like get more or less confirmation, just one direction or the other. I guess due to the action of the last couple of weeks, like I'm back in the camp where I think we're gonna get that next leg down, or at the very least, we're gonna be testing the lows. The banks just look kind of gross to me.
Yeah, I
almost
agree,
like they're
man.
kind of like it's a rounding top almost. The monthly looks like looking at Goldman Sachs, for instance, like the monthly doesn't look good. The weekly, it looks like just a gigantic rounding top with a floor basically kind of about 365-ish. So like I don't know.
My thing, Nick, is that banks took 13 years to break out of a base, right?
Yeah.
Out of the 08. So until I see like proper breakdown, I hear what you're saying. I can see the rounding top.
Yeah.
Right. So to me, this is out of a 13-year base.
We're pulling back to test the breakout.
Yeah, we could go back to test the breakout.
More. Right. We're still holding above the breakout.
I think we got that test like in October of 2021. Or 2020, is it? No, January of 2021, of the breakout where it tried to break out and failed and then rallied up. So I see what you're talking about with the rounding top. I guess this is my bias of looking at charts over the years, is that something that took 13 or 14 years to break out of a base is most likely going to correct over time. And
I see what I totally
keep it fairly shallow. Yeah.
I wasn't looking out that far.
Well, you were just looking at the monthly, so that's why I mentioned it, right? That's to me, you have this massive base that since the financial crisis has just gone sideways. You even had the failed breakout in 2020, right? The massive failed breakout from 31 all the way to 17 or 18. And then from that false breakdown, you came this fast move. And I could see this as being, and we need confirmation. I'm not saying it's bullish or bearish. I just noticed the Goldman Sachs on chart on the weekly on earnings, and I didn't see an uptick in volume. I didn't like that was surprising to me, right?
So you'd look to be long the XLF pretty much anything between 31 and 35, right?
If it got to 31 and holds, I think that's probably a good retest. 32. You really don't want to get a back test there after this long, because it's most likely going to fail. I'd prefer like a 50% retrace of that big move.
Okay.
Of the breakout, sorry. So from like, it broke out from like 31 to 41. So to kind of hold that 35 level, which also ties in with the monthly 20 month moving average.
I like that.
So like, it's not like I'm bullish, but I'd like to say things that break out of bases after 10, 15 years tend to shake you out a little bit and then move higher.
Yeah, I would agree. Like that 35 spot would be the spot I would probably pick at if I were so inclined to. But
it definitely seems like, and it kind of even it is going to be the year of finance. I would for sure bet on banks and all financial products.
Really?
That's interesting.
I mean,
I hate banks, so I fundamentally don't want to find a bullish pattern.
Whether it's banks, like I would think that between crypto, the banks, how the user to user, like real estate stuff. I think it's going to be a big year, or I'm sorry, a big decade for kind of all things financial. Yeah. Just
Yeah,
kind of
this directly
and this
messes with my conversation of banks are the last leg of the secular market, of the secular bull market. So like that's the only concern I have here is banks are the last sector to banks and commodities tend to be the last sectors to participate in the secular bull market. So that's always sitting in the back of my mind.
I mean,
I don't know what causes us to decline like, 2000 or 2008. I don't see anything at this point. That's too bad. We can go sideways for a year or two. I'm just saying I don't know what causes a collapse.
I don't think we're going to get a collapse.
That's what everyone's banking on, though, isn't it? Isn't that what I keep hearing?
Dude, what somebody mentioned about like a leg down. I don't know if it was Monkey, Banana, Genius, or somebody else, but like I'm definitely in a camp that says that or thinks that we're gonna get a leg down to like the melt up of melt ups.
Yeah, unless if we don't hold 317 area, I'm not in that camp.
On
the Qs, sorry.
Qs.
If we break 317, that prior pivot low, I'm in the camp that we at least retest the COVID highs.
I don't. I think if we leg down, I think we'll bottom out around 269, 69, 270ish. Like kind of like I think that it's going to be a short-lived I don't want to say how I think it plays out.
Stand on it with your chest. 269, 69.
Yeah, I think that's kind of where we're heading.
If it's just a technical tag, right? Like this is where I'm struggling right now. Is everyone is like, oh, it's going to go here, it's going to go there, and then they cite all the things wrong with the world and the economy, and they hope to buy it there. And I'm like, dude, all the things in the world and economy. And it tags 270. You think those things in the economy just go away? All of a sudden, you've bought at fair value, and the market's going to readjust up to being overvalued again. Like the concept doesn't make sense to me. It's like, why would you wait for the market to pull into fair value?
Sure.
To buy, you'd want it to be undervalued, no?
I mean, if you're trying to buy high and buy low and sell high.
Maybe it's my simple brain, but I don't really get it. It's like, oh, when it gets to 270, I'll buy. And I'm like,
no, you
why?
won't.
No, you won't. That's the better. Yeah.
No, you won't. Right. I've raged on this for the beginning of fucking time. That the people who are saying, oh, I'll buy when it gets here, they never do, because it's always, well, it'll go lower. I'll buy it lower. And it just becomes a miserable bear thesis. I don't want to get stuck in on that, but I do want to drop something that I'm finally bearish for the market in general. It's been a while since I've been able to really come out and freely admit that. I see Nick's point of view. I'm not saying we get down to 269, 69 on the Qs, but that 297, 296 area is definitely achievable quick, fast, and in a hurry. So that's where I would look to play. I kind of threw this range box up here of where I kind of think it might end up falling, but I don't. It could absolutely go 269, 69, but I to keep any short-term bullish thesis.
I don't see any support there.
I just threw that out. The measured move that I actually have is 281. So that's what I was thinking, 280. 260, like the 260 is kind of like that floor on the monthly Qs. Just
below 310, it gets ugly. I mean, let's be real with that. I mean, below 310, it gets ugly. But we have seen in the past, and we're looking at the weekly chart here, but we have seen in the past where we kind of get it's almost like a vacuum when price action dips below one of these areas and it just comes right back up because buyers just immediately step in. Now that's the way the market has performed previously. That doesn't mean it'll do it the same time this time, but I would kind of expect that. But again, I'm not saying it's going to 298. I'm saying that would be a logical place for it to kind of bounce out of it if it were. But yeah, it could. Once it got in there, GP, you're absolutely right. There is no volume support, and that shit could fall a lot further.
Can you pull up the yearly chart on this?
Sure.
So 297 is last year's low. To me, we break if you look at the bar there, we break 297. Look at dude. To me, I will continue to say this. If we break the 13,317 level or whatever that level is, that's our support. That's our short-term support. That's our intermediate support.
Yeah, that's 317 right there.
Yeah. So like we break below that, the next pivot kind of right there, the rounding bottom, wherever that amount is. Damn it, hold on.
Right here?
Right. Like
it's like 297.
The prior year lows. That's exactly
297.45.
That's dude, it's not gonna be pretty. Like I hope I'm wrong, but if we break last year's low, it becomes a upside year to a downside year, right? We gave back the entire move of last year in the first 5 months or 4 months.
Good. That's a pretty good midway of the range box there. Anyway, I'm leaning bearish. Like I don't think we're gonna reverse straight up out of here. Like, yeah, we drew this line in a couple weeks ago. This black one, this top one here. But we could still come down and check 336 and bounce out of it. But I think at best we're probably getting something closer in the 320s. There's nothing in the price action that tells me that we're not right now. We had a huge reversal off of this action, right? And it's just been shit since. I mean, again, Nick left us, and this is the shit we have to deal with.
Yeah. But so once again, what's going to come into play to me is that January 24th capitulation low. That is the biggest volume on the Qs in the week on the weekly we have seen since I think 2009 or 10 or something like that. It was ridiculous, like almost a decade or plus. So that's why it's so that 334.15 price level is the one that I'm watching here, because that breaks, it's the next level. Right?
No, that absolutely makes sense, GP. And I say this all the time, and I'll continue to say, I am very happy to be wrong when I'm bearish. I'm very happy to be wrong because I'm net long, right? So while my looking at charts tell me that this is my rationale, this is my short-term thesis, I'm happy to be wrong about that. But I just don't like the look of what price is telling me. And to me, price is my number one indicator. I can throw up all these other things up on my chart, but price just does not look great. And I hope I'm wrong, but I just feel like that's not what we're going to get in the short term.
I'm happy to be a bull amongst the bears.
Well, I'm trying to do the reverse jinx. I'm trying to get you over here so the last two bulls turn bear and then we fucking rocket higher. If you can't remember our conversation from a few months ago, I'm trying to get the last bulls to be bears, GP.
Yeah,
I'm everything I can to turn it around.
No, I appreciate that, Bags. I'm still in we might have shitty price action for the next couple of weeks or whatnot, but all I see right now in the markets is sell in May and go away.
Yep.
We're just done. Recession's imminent. all that stuff. And so far, if you bought puts, you unless you bought puts like the day before, you've probably been chopped up even in puts, right? Or unless you're shorting actual shares every time it gets to a resistance level. But the puts haven't been, even though puts have been closing in the money consistently, if you bought like 2 weeks out, you've probably paid an arm and a leg, and you're not getting the same returns that you would expect. So it's not been easy for either side, is what I would say, unless you're timed.
It is definitely
unless you're timed,
right? Because depending on when you bought and sold, of course, right? Like we're just looking at the cues a second ago, right? Like sell into resistance, right? Sell into resistance, and you did well, and then all of a sudden you get that action, and you could basically say this right here, right? You could have bought some puts into resistance, and then you got your ass kicked. So it's not been an easy market to trade unless you're some guru genius that's just printing 1,000% every other day.
Yeah, what's a really good indicator for me is actually watching the Amazon options flow. I don't know if anyone else is doing that, but Amazon's a stock that's been sideways for 2 years plus 2 years or so now, right? Yep. So I look for clues, and they have some big, strong catalysts coming up and stock splits. So I'm watching that for how options is flowing. Every time it gets to a resistance, I shit you not, Bags, it literally, you're talking about thousands and thousands of options of spreads that go through, and they're like $5 or $10 spreads. It's the weirdest thing in the world. You'll like on, I think, Monday of last week, when it hit like 33 something, or the week before, they came in buying 34.60, 34.70 put spreads a week out, 2 weeks out, and that was like literally the last time it saw a high. So I've been watching that for kind of flow in terms of what's going on, because if you're going to see something move, it's going to be that out of this consolidation.
Hey, Nick, I think you said you were back in some miners, right?
Yeah.
Which ones did you get back into?
I got Ego, AG, FNV, AM, and Gold.
I mean,
not the I mean, I finagled my way in all of them kind of versus either the 10 and the 20 day. Like I was just back at my desk this last week, so I don't know. I think we're getting ready to. I don't know what's to come, but I think that in the commodity and energy space, I think we're getting ready to see a monster move higher.
I don't hate the look of any of these charts that I've pulled up really quickly.
No, I know like I bought the USO. I bought the USO on the breakout at like right over 75.
Nice.
And I don't know. Again, like I'm not a commodity. Yeah, I'm literally just trading the chart. I honestly, I don't know. I'm thinking like, USO, I'm looking at like a 65 to 85 range. So I'm thinking the USO pushes $100 easy. In some capacity, I mean, I just think 100 is going to be kind of that magnet.
Yeah, it's funny how that happens.
Oil takes out all-time highs then, if USO is pushing that hard. Is that the correct assumption there?
I don't know. I don't know.
So that'd be 20%.
What is
147?
Oh yeah, that would be all-time highs for sure, GP.
Yeah, and then should escalate further.
Yeah. USO's 25% from 100, and CLF was basically 20% from all-time highs. So yeah, that would USO up to 100 would be oil all-time high.
So does that mean the gain percentages on anyone who bought oil when it was negative is infinity?
Yeah, I guess so. That's crazy. That's crazy. Holy shit.
GP, to talk, sorry to bring it back to gold, for instance, gold really has been behaving exactly how what we kind of discussed, how, it pushed into that,
Yep.
at least the GLD, pushed into that mid 190s, and it pretty much held. I mean, the day, what was it? The daily, like, it was looking pretty ugly there for a little bit.
We wanted it to hold like the
and
175 level, right? Or something like the breakout level.
Yeah.
Is what we were looking for. Yeah.
And so I don't know. Like I think gold's continuing to impress me. And
there's nothing pretty about this area right here. There's nothing pretty about that.
Not on the daily, but I mean, if you look at the weekly and the monthly, it's still within last month's bar. Like, I think you could use last month's bar as your risk on a GLD trade if you wanted to. So, like, when I say that, like, I think you could risk 170 at this point. You could risk 175. But
I don't personally like it, but I hear what you're saying.
Sure.
I'm
chasing action.
No, and that the daily is what's got me kind of. I'm looking more at the futures of gold.
Sure.
It held the trend line. It's acting well from what I can see. It's such a miserable trading chart that
I'm not disagreeing with you.
But everything's miserable right now, GP. So this is where I was, about to go earlier with my bearish thesis, right? It's just not typically the way I would look at how I would put money to work, which is very outside the box thinking for me, because you guys, I mean, I like growth. I like tech. That's my bread and butter. That's where I've made money, right? So, like, I get it. But these oils and commodity plays, like, I can't deny that, the gold, retaking the 9 doesn't look good. I mean, I was putting up, and I was singing like Little Cup and Handle, right? Like it looks fucking great to me. When I go back to oil and, I'm going to use USO. I mean, it's 3 weeks. It's checked into the 9 weekly. It's trying to test a breakout. Like while I may not like what action is happening in these certain areas or stocks or ETFs or sectors, I can't deny that this could break out and be very bullish right here. Like I can't deny that. Right? I can't stick my head in the sand and just act like it's not happening.
I can, based on where it's come from, right? That's where I'm at. Is that if you're looking at USO, if you're looking at a lot of these names, they're in their parabolic motions, and the parabola.
I get it, and I'm probably not.
Parabola can go up higher for sure. I get that,
because that's just not me. I don't chase a late move, but at the same time, like, it's hard to deny that doesn't look bullish.
I mean, looking at like a monthly chart, like let's say the EOG or PXD, I mean, they look very similar to like the banks in terms of, like, Goldman just recently within the last year busted out of what'd you say, 10-20 year long base.
Yeah,
it almost kind of looks like
I don't see a base on EOG. That monthly looks terrible. Like not terrible as in like it looks choppy.
From one.
What's the base here, right? Like
I see a gigantic range from 30 to 110.
Yeah, so it's a wide range stock that can easily go from 72 to 21 in like a year or whatever. But
it takes out those highs though.
It takes out those highs. Yes, it can go higher, but you're already, to me, EOG since August of 2020 has put in $100 move from 27.
Yes.
Right. So to me, this is just how I look at things, is you have something that's up nearly 500% into multi-year resistance on a straight up move is most likely going to fail the first time. And maybe I'm wrong. Maybe it's
no, I agree with you. Needs time
maybe it's strong. Maybe it's going to just ignore all technical. It's possible. But if you're coming in after a 500% move, I'm not going long here, right? I'm going to wait for the break. I rather short this than go long this. But that's me. Everyone trades differently.
I mean, you got like Marathon Petroleum here. I just randomly pulled up Marathon because I've dabbled in Marathon in the past. It's ready to break through all-time highs. Like it's ready. Could it fail? It absolutely could fail up here.
Another 800% move, right? Like
I know, and that's the point that I'm saying. Like, I'm not saying that I'm chasing a late move because I'm not going to be a participant. But it's hard for me to deny that the chart doesn't look bullish. You know, we can go to another one I've traded in the past, Valero. Like Valero's trying to break a range, right? Like this, I'm going to call this a range. Right. So,
but I'd ask why it's just breaking out now when oil was 30% higher a month ago, right? Like these are the questions for me.
It could be we could be talking about a massive repositioning of, portfolios here. If we're talking about, like, let's just say we're talking about energy breaking out of a gigantic, what's the energy ETF?
XLF or XLE.
XLE. What does the monthly look like?
Dude, they all look.
So like, let's just say energy breaks out to all-time highs. Banks are breaking out to all-time highs. Like, we could be talking about a massive rebalancing of portfolios for people that need exposure to energy.
I mean, you're the commodity guy, GP. Like, you're the volume guy, and I'm not saying this to shit talk you at all, but look at those last 3 volume bars.
But look at that actual last volume bar, right? That's the most volume in 13 years, and we're not at all-time highs, right? To me, this is just how I see it, and maybe 10 years of learning is all wrong, and they're gaming me. But to me, volume coming in at the highs is distribution, not accumulation. That's just me. Like what hedge funds all just woke up today, and institutions just all woke up today and said, I'm gonna buy the crap out of this now after watching it go up 450%.
So you think this is retail chasing, is what you're saying?
I think the volume breaking out here is a concern for me, right? I would have loved to see the volume come in.
I'm not disagreeing with you. I'm asking your honest opinion.
I don't know if it's retail or not, right? I can't give you that answer.
But I'm saying that is a significant volume bar. That's the second most volume, since 2008. Okay.
And we're not
I know
anywhere
it's
close to all-time highs.
and I know it's not at all-time highs, but it's getting there. So do you think who do you think is behind that volume for last month in energy?
I think it's people who've been long since the 2020 lows who are starting to who are using the bullish sentiment right now to get out of these positions after a 400 or 500% move. That's personally me, right?
I mean, I guess I don't know. I just think it's a question that I don't understand enough, and I'm asking you to help me.
So
if
let's pull up
someone was
pull up
in from the
Square.
2000 lows and they didn't sell into 2008, the fuck is wrong with them, right? Because you basically had the same move. You basically had 300% move, right? So if you were in here to do that, like what the fuck is wrong with you, first off?
Yeah.
Second off, like, yeah, I mean, oil went negative, right? And we're looking at the XLE, and that was a huge hit on, the price during the March 2020 episode. So you've done that, right? You've done 250% in 2 years as compared to 345% in 6 years. So I'm not saying that you're wrong. I just don't think that people are getting out because it's run up 250% in 2 years. I think that there's still some meat on the bone, because if we just look at this volume overall, volume keeps going up. Now it'll be interesting to see how April comes in, because if April's not in this sort of like area right here, then we can say, well, it's on the decline for sure. But
we're already
from 2020 on, 2019 on, volume has only increased in the XLE.
ETFs are hard, right? Because in general, they're constantly pulling in and pulling out shares. It's like the Kathy arc and stuff like that. So it's hard to compare like 10 years ago in terms of volume. So I'm trying to look more short term based on.
That's fair.
Right. So because they're always constantly closing out shares, opening up new shares, all that. That's how they keep liquidity in these.
That's fair.
In these. So that's not as much important to me about 2008 and stuff. I think it's like, if you look at, let's take Square, for example, right? Pull in Square on the daily. So if you look before this volume kicked in here at the base in August of 2021, that volume, that daily volume, I think was like the second highest daily volume since IPO. Right?
Yep.
So like if you're saying volumes coming in after this big of a move, and then what has happened to Square since? Right? It's down 60-70% since. So what I'm saying is, when you have these extended moves and you see volume starting to kick in higher, it's, to me, it might not work on every chart, but in general, the way I see it is, if you see volume towards the end of moves, it's like the final distribution move. It's the capitulation breakout, right? The same way it's a capitulation breakdown. If that makes sense.
Yeah, I'm just reading volume the way I would read a chart, right? And the way I'm doing that is, like, again, coming back to XLE, and I'll come right back to Square.
Yeah.
Is basically, we are in an uptrend, and I'll draw this real quick. Like, this is going higher, right? Volume is steadily increasing higher, basically month over month, with a couple few exceptions.
Except for April. It's a fifth of the volume.
Yeah. That's what I'm saying. If April doesn't come in somewhere up here, which we're halfway through the month, it still could. If April doesn't come up somewhere up here, then it's rolling over. But when I look back at Square, like, Square's had huge volume as of late, and I don't want to get this on the Bags and GP disagreeing because we don't really do this often. But
no, I'm walking you through what I see.
Yeah. So, right, we had this huge spike here, but to me, this looks very much more of a rollover in volume. See what I'm saying? Like that looks very much like a rollover. This right here, the one that you were referencing, while volume did decline and go down, price action still went higher. And it can do that, right? Volume
for a couple days, right?
Yeah, for a couple of days.
Another breakout, and that was it.
It still went higher, and then it eventually failed. But what we're getting here, to me, again, I rarely use volume, so maybe you can correct me. This very much looks like volume is rolling back over.
No, it's to me, the way I see it is it's accumulation in a base from 4 years ago, right? Like that's volume coming in at the bottom end of the range. To me, that's reaccumulation, etc. Right? We haven't seen another low since that big volume, right? That's the capitulation low. Capitulation top was.
We haven't seen it yet, right?
Yeah, so exactly. Now, and you'll see most of the bars to the upside are significantly higher volume than the ones to the downside here, right? So even though it's kind of tapering out, there's some large accumulation bars here, right? Post earnings, pre earnings, then even the breakout in March, and the pullback here after that March March kind of push up has been on higher volume, yes, but on still declining overall, right? So if you pull up XLE on the daily here versus the monthly, you see how like that's that capitulation volume on the daily, and then it's been slowly declining over time as it tries to continue breaking up. So like I look at it on multiple time frames, which is why,
of course,
it's not just easy to say, oh, volume bar was big, you should do this, right?
Of course.
But my general rule of thumb, and dude, if energy goes up and everyone makes a bunch of money, that's all this stuff is about, right? Making money ultimately. But to me, this is a concern because you get volume at the top end of the range and not at the bottom. That's distribution on my views, on my purviews, on my thought process. So I'm not looking to get this chase to the upside. If I can see it going to 91, 92, which essentially helps create a right shoulder, maybe, if you're looking on the monthly. Right? You could potentially get to that level. I'm not saying that you won't have incremental moves up here, but I think the long story here is that it needs consolidation.
15% more on the bone.
Yeah. That it needs consolidation after this big move up here.
I don't disagree, GP, and I mean this respectfully. I just think that it's hard for me to argue that it's not, or it can't go higher, and 15% might be a good number. I don't know, but when I look at, right, when we were talking about the daily and the weekly, it's hard for me to deny that.
Yep.
And I don't like saying that, right? Because I'm at heart a tech investor. And it's just, it's like it's drinking vinegar for me to say, hey, fucking XLE and oil and it all looks fucking great. Like I don't like it.
So let's do
because
this, right?
there's a negative correlation on the things that I invest in when that's the case, right? Like I don't like it.
Let's take a look at another sector that inherently people don't like, XLF, right? On that move up, how does it look?
I was saying this earlier, and I do disagree with Nick on this one, and I don't like the way the financials look right now.
No, but on the move up, right? How the monthly? If we're comparing to XLE.
Yeah, I hear you loud and clear.
So you see that big volume kind of that spike on the downside, right? That's where all the volume came in, and then you had a break to the upside on higher volume. It's stuff to watch, right? Nothing's exact sciences ultimately. I just know when I see volume coming in at the top range of the move, I don't want to be a part of that.
I mean, don't get me wrong. I would love to get some Goldman Sachs down here in like the, I don't know, like the 260s, 250. I mean, if it came down to 250, God bless America, I'm buying it left and right. But I think this 270 area is probably 275 is, that'd be like happy birthday bags.
Yeah, well, I'm in at like 180, 190 area, so I'll take 250 and hold for sure.
Yeah, for sure. Sorry, Nick, we got off on a little
Oh no,
rant
I'm listening.
Nick, what do you think?
Yeah, what's your take on all that?
On Goldman?
No, volume in general.
Everything.
I hear what you guys are saying on terms of volume. I try to take a little bit. I try to take a top-down approach, coming from the monthly, weekly, daily, but then, I'm making my decisions based on the weekly and the daily. I don't know. I see what you're saying in terms of on Goldman. Like, I like the Goldman monthly. I think it's like we were kind of talking about. I like the Goldman monthly more than I like the XLE monthly. And I'm with you, Bags, in terms of how bullish a lot of the energy and, I don't know, commodity looking stocks look to me. To your volume point, GP, I agree and I disagree in terms of volume coming into highs and lows. If I see price coming into highs and volume is surging, like really coming in, I agree. If the pivot gets taken out, I'm going to assume that breakout is going to accelerate. But if I see price coming into an extreme on low volume, I'm much more inclined to bet on it failing if the volume is low versus if the volume is high.
What do you think is happening in XLE though? If you're looking at XLE on the daily, the volume is inherently slowing down every single day, yet it keeps pushing higher.
Then, right. So then as price pushes higher on lower volume, I'm thinking let's see, hold on. I'm pulling up the XLE chart.
Yeah.
Oh, you have it up right here. I'm sorry.
Yeah, we're looking at it.
Right.
So I see what you're saying on the daily. Yeah.
That's the highest close in XLE in what, 4 years? I believe.
Lower volume. Yeah.
And each push up is with less oomph.
Less
to me.
oomph. Yeah, I see that.
So we can talk about the monthly, right? That was a huge volume, but we're on April. Tomorrow will be April 18th. There are 10 exact trading days left in the month, and the XLE monthly volume.
It's basically half of what it should.
We definitely won't come in.
It's a fifth. We did 1.1 billion shares in March. We're at 270 million right now. So a quarter of what the push here is. So that's to me, unless we see what insane volume come in the next 10 trading days, I don't know how I see anything but
it is very overextended, the moving average on the month.
It's what, 50% above the 200 week?
If you zoom back out to, I guess I don't know if this goes to the point that you made earlier or not, in terms of like how they mess with the shares, liquidity and stuff. But the way that I would be looking at the XLE, the weekly and the monthly, is actually kind of very similar to Bags in terms of like the volume since the 2020 lows has been on a crazy increase in volume, just looking at all that. So this move higher into highs, I don't know. I guess I would be in the boat that it is accumulation versus distribution.
Yeah, like I said, I'm happy to be wrong for all the
time will tell. You know?
Yeah, so that this to me is like also goes against it also goes with like, you know, the markets are going to crash. It's hard to crash when you still see money rotating out in XLE, and I was like, it's just rotation then. It's not markets crashing, it's certain sectors, right? So if you guys are in the bullish commodities and energy camp, then the market should hold up over time, right?
Yep.
Because it's just tech being crappy and nothing else.
That's the boat that, I mean, that's the camp that I'm in. I'm kind of in that camp that we're going to get that one more leg lower, that one more real nasty push and puke lower to I think you're going to be able to buy anything and everything.
Yeah, and I hear you. I think we're going to have a fairly strong close the next 2 weeks. I wouldn't be surprised with the Qs above 370. That's just how I see things here. But that's just what I have, right? And it
and
could
I
also
want you to be right so bad.
I think it could just chop for the next 3 years, 4 years, and people are gonna
pull their hair out. You think we'll close above 370 in the next couple of weeks?
My personal opinion, yes, but
so then on the weekly or even the daily, the Qs, I mean, basically what we're forming then is an inverse head and shoulders, and we need to kind of hold basically
334.15. The January 24th capitulation lows. I've been talking about this forever.
Yes.
That is such an important level to me. Maybe I'm just you know, starstruck and doe-eyed with that January 24th capitulation, but to me, that volume on the Qs on that week was monstrous, right? Like that is the most volume we've seen since August 2011. 11 years.
I agree, and I want it to hold here. Right. It's not what it's what I want and what I think. Right. And what I want is for this scenario to work out and play out just like it's drawn right there. That's what I want to happen. But what I think is going to happen based off of just the way price action's been is I don't trust that it's going to.
The reason I don't is because the gaps are in the direction of that intermediate trend. Like I think that's the direction we're going to continue. I hope I'm wrong too.
Like if you're looking at the Qs based on how weak Friday was, why didn't we break the weekly low? Why did we get saved by 17 cents?
Yeah, no, that's a great point, GP. And you know, again,
right. So that you have this bearish candle to a bullish candle, bullish inside Harami or whatever you want to call it, to a failure of the Harami, but we couldn't take out the lows. So you have essentially back-to-back inside days.
I mean, we have basically kept this 338 level in check. And while there might be some room just below it, 338 has remained in check. You're 1,000% right.
And until we break that 334 level, my thought process is that April will end up above the two pivots we've failed a few times. If it's range bound, it stays between 370 and 338 for the next 6 months and pisses everyone off. But
sure.
Right. So we'll see, right?
Coming back to what you were saying just a moment ago, though, GP, you know, that's kind of the way I'm looking at the way, you know, the bull market stays alive is, you know, energy, you know, that's going to everything's not going to zero, right? The market's not crashing when these other sectors basically are helping you stay buoyed. And energy right now, while it may be way far extended, it does look okay. The industrials, not the worst thing out there right now.
Look at what the transports
we've
did
got
this
healthcare.
week.
Healthcare has been, this has actually been the worst week for healthcare in a while, right? Since February, basically.
Yeah.
So there's sectors in the market that can keep the market afloat until you get your leaders returning. And by leaders, I mean, your Apples, your Amazons, your Microsoft, etc.
Yeah, and it might be July before they return because they're waiting for the splits or whatever it is. Because right now they can use everyone's heartstrings to have them buy calls and then destroy the price, and then have them buy puts after they destroy the price and then run it the other way because they have this carrot that's hanging about stock split and it should be bullish and blah, 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 right?
Yep.
We talked about this about Google when it split. I'm like, yeah, 5 months out? No, I have no desire to be in Google over the next 5 months because it's going to be nonsense.
Yeah, we've discussed that out.
Look at IYT as well. Bring up the transports, right? Because the Dow transports theory.
Good old Dow theory.
Yeah, that was a pretty solid week.
Yeah.
4 straight days of up.
You had this big puke out, right?
Yeah.
And then all of a sudden we're right back to the 9.
Yeah.
I'll never be in the camp we're going to zero.
No, me neither.
I'll never be in that camp, but short term, I'm bearish.
All right.
I mean, I try to use bearish patterns I try to use bearish patterns to time long entry to get better long entries. Like if you know where a bearish pattern is going to complete.
Oh yeah, 100%.
And you have a long bias, like that's like a low ass risk entry right there. And that should give you for traders, that should give you the balls to buy those like nasty red days, because a lot of them are happening towards the tail end of like a pattern completing its measured move.
Yep. I don't disagree.
I want GP to be right. I want to be wrong. I want Nick to be wrong so I can be wrong, and GP to be right, and my portfolio will thank me for it.
Well, Bags, if you're talking to people about their portfolios, they're probably doing better now than they were at March, kind of right before FOMC. Even though everyone's kind of bearish again, all the prices of probably the stocks that they own or bought are up still, like 20,
for sure. Yeah, for
20%. So it's inherently better in that perspective. So like the one comparison I try to do is when the Qs were at 338.43 last, I don't know when that was, back in February or March, where were the prices of some of the stocks that are popular amongst the retail crowd or the institutional crowds? And it's a good comparison. Like it's hard to do on a chart, but just kind of like a mental conversation of, oh yeah, a lot of these stocks were 10-20% lower.
Well,
price range.
I just scan the sentiment, right? And I've talked about sentiment a lot for the last 2 months, and sentiment hasn't really increased other than that mid-March run up after FOMC, right? And I think Cookie was calling it the 4 weeks of pump or whatever he was saying. And not that wasn't wrong. I do think we can get some lift to the upside, just price action. And again, we're at a pivot right here, right? We're at a pivot right here.
Yeah. So
I just think we're going to undercut it at best.
All right. Can we give a guess can we do like right before we close? Can we do like a our like 10-second kind of where we think the markets will end the week conversation? Because I think that would be fun.
Where the markets will end the week.
Yep.
So next Friday at close, this coming Friday at close, where will we be?
And you don't have to give exact numbers, higher, lower.
I'm going to say roughly flat.
Nick?
Shit. I'm going to say we're going to.
I'm not going to hold you to it. It's just adding some different elements to this conversation.
I'm just going to say 333. We're going to maybe bounce into the week, and then we're going to close on the lows.
By flat, let me say, I'm going to say plus or minus 1% roughly for the week, right? Like
okay,
that's flattish.
342 to 330.
Yeah, 335.
Yeah. I think we're above 355 by the end of the week.
355. Woo, shit.
Can I share? Let's see. Oh, I can't share my screen. Okay.
Yeah, you can. I can let you.
Okay.
Go.
All right, so you guys can see my chart of the cues. Okay. So this is kind of just like what I'm watching, and like again, if this ends up being kind of an inverse head and shoulders, all bets are off and all better for it. I guess I just wanted to kind of clarify or give some reason as to why I was kind of thinking like that 270s on the cues. If this is the channel that we're kind of in, and starting to wedge down, I like to look for for 5 waves. And if it bullish in a bullish scenario, I want to see that 5th touch on the lows and then catapult out. So I was going to talk about the spiders first, because the S&P actually already kind of broke out of this channel. And a lot of times what I've seen happen is when we break out of a wedge like this, a lot of times we'll come back, we'll retest the lows, and like that'll actually be the double bottom right there, not, this kind of short-term double bottom. It'll be more pronounced, where we'll come back here, test here, and then kind of bounce out. We're not there yet with the cues, just in kind of what I'm looking at. And so it's kind of what I was thinking, like we're going to kind of roll back down into here. If where I have my fibs on a longer time frame, where I have my fibs kind of measured from is basically this breakout here, not so much the COVID, the highs up here. Like I view this breakout right here much more significant than like this one here. So anyways, and just because this is a much longer base, and so the 50% retracement from this breakout would kind of be in line with this 300, the lower touch of this channel. The 0.618 would be, we take out that, the 300 that we were talking about, and boom, you got a big kind of window here from basically this 255, 260 all the way up to, basically 300. So who knows where, let's just say this 300 doesn't hold. My bet is that we bottom somewhere, we put in at least a capitulation low somewhere in this range, not coming down to here and then shaking out higher. I just don't think that they're going to give us the opportunity. I think too many people are like, oh yeah, like I'd love another opportunity if prices back down here. I just don't think we're going to get it. I think it's going to be kind of more like we kind of break down here, we hold, we break up, we start to rally up, kind of build kind of a big old range in here. Whether we pause up here or not, who knows, but this is just kind of the zone that I'm looking at and looking to get much. I want to get as long as possible, probably down in those areas if I can. I don't know if I will, if we'll get the chance or not, but.
So I have a question for you, Nick.
Yeah.
I hear that you think the breakout is down there, right? The
Mhm.
190 level.
Yeah.
Typically we get a bear market from 20 to 30%, right? And anything below a 30% move is, sorry, a greater than 30% move is considered like a full kind of like correction, like end of secular moves, right?
Sure.
So in COVID, we got a 36% move down, I believe. So we passed the bear market territory.
From here to
We
here.
passed
Yeah.
we passed the bear market territory. We entered into like, just, and yes, it was short lived. I get that, but it was still a 36% move down in a very, very short time. So the way I've always viewed it is when we reclaim that breakdown level is when the new kind of secular bull starts, right? Yeah, 237.67, I think is the level there, or whatever that all-time high was previously before it broke down.
Yeah.
So for me, if you take that as the reclaim of the bull secular trend, then we tagged a 50% retrace of that move so far.
From here to here?
No, the 237.67 to 408.7.
Oh, from here to here.
Yeah.
Yep.
So that's about a 50% retrace. So that's the way I've been looking at it, because of the size of the, like, I think we've talked about this in the past before too, but during COVID, man, no one knew anything, right? Like everyone was scared out of their minds. 10% down days, 10% up days, 10% down days. It was normal, right? People were freaking out, the end of the world, end of human civilization. And then the Fed jumped in and took care of the rest. But so when we reclaim that level, I tend to use that reclaim as the new trend to start.
I feel you.
So versus a base retest, right?
Yeah, I gotcha.
So yeah, that's the way I've been looking at it. So I'm curious on if you've done like any back testing or anything to say that this is more of a, when you're using fibs, because I'm not a huge fibs guy. I prefer pivots in general. But I'm curious on if you've seen evidence of how these breakouts and stuff like that happens.
No, but I try to be pretty, I look at it as, like, let's say you're, a blackjack player, and, do you hit a, I don't know, a 12 on 12 or something. I don't know, something that's like kind of like borderline, like you're going to play it one way and you're going to do it consistently that way, right?
It's always consistent. Yeah.
Yeah. So when I draw my fibs, I'm largely going to try and look for areas of confluence where I can stack multiple like levels on levels. So I would, over the time, I've definitely been measuring my fibs from both where I have them now and exactly where you're talking about, just to kind of match things up.
Yeah.
As far as back testing, no.
Okay.
It's just I typically am going to measure my fibs from like a major base breakout or a major low. So like if I wasn't going to measure it from here, I might measure it from the COVID lows or from the first higher low. So it might have been from like here or here. That those aren't as pronounced as like let's say, I don't know, I don't have another good example.
No, but what's interesting, right? Because if you take the COVID lows to the highs, it's about a 38% retrace, which is standard in like wave 2 corrections.
Yeah. So I'm still in the camp long term, like getting more and more bullish by the day. I think on an individual name basis, you're getting stocks at prices like that you haven't seen since before COVID.
Yep.
So even if the
Agreed.
index is like, how much more can they knock them down? Like how, I don't know. Long term, I'm getting more and more bullish, I guess, until
Yep.
something really nasty happens.
Yeah. So what I'm watching for this week is if we don't hit 355 and we break down below 334, you're gonna need to see confirmation on the break of that capitulation low from January. So you'll need it on the daily as a confirmation, and then also on the weekly. That's what I'm looking for in terms of bearish move.
I don't know. I don't know where we're gonna close the week.
Oh, it was for fun, Nick. Don't
Yeah.
think too much about it. I don't really care.
I'm not
gonna come on and hate on you and troll you.
I am though. I wrote these down.
I'm gonna call that 330. I'm gonna say Q's 333 right there.
Okay.
332?
333.
333.
It'll be interesting, man. It's just
350. Nick is
it's gonna hit
333, and I am plus or minus 1%.
this guy gives a range. Everyone gives numbers. And this guy
It's
gives
flat. It's flat. What do you want? More than 1% is up
flat is 338.43 by Friday.
All
That's
right.
what flat is.
Buddy.
Buddy.
I'll say a 0.5% range then.
Oh, commit, Bags, commit. We're in chop, so this is just trying to have some fun.
I gave you my answer. All right, guys.
Yeah, it should be interesting.
Hey, man, we've done it again. Another hour of hey, and this was good. Again, GP and I don't disagree on much, and it was nice to have a little sparring for a change. So, yeah, it's always a pleasure hanging out with you guys for an hour, talking markets, talking what we think's happening. At the end of the day, all we can do is make our best effort, and I feel like the three of us do that. So, GP, Nick, thank you guys again, and Nick, welcome back. It's great to have you back.
Yeah, thanks.
I know I mentioned that off the rip, but it was a hard 2 weeks carrying GP, I'll tell you.
I'm happy to be here. Feels good to